Helima, tell us a little bit about what is kind of riding on this meeting right now.
I mean, there's an expectation that we are going to see a significant OPEC production cut. This will be the first major OPEC plus cut since 2020 when oil prices went negative. And this is obviously something that the Biden administration would be, very concerned about. The question is, how large is the cut going to be? We're hearing numbers like 2 million barrels a day production cut. Who will make the cut? A number of OPEC countries are underperforming. So the question is, are the countries that are the major producers going to do the bulk of the heavy lifting on this production cut?
Helima, the big question in this is, look, OPEC exists for a reason. It's to try and manipulate prices of oil, keep prices higher. What do they think is a fair price at this point? We used to think $40 to $60 was okay, or $60 to $70. If they're not happy at 87, what's their expectation of where oil prices should be?
I mean, OPEC producers always say they are not targeting price. I think there are multiple reasons why a production cut is likely coming. I mean, we had Prince Abdulaziz, the Saudi oil minister, several weeks ago express real concern about what he believed was a disconnect between the financial and physical markets. So is this a sort of circuit breaker that the Saudis are throwing into the market, saying, you're more concerned about Jay Powell, we're going to show you that we are a regulator in this market? Russia, though, is a clear factor to watch, and the deputy prime minister of Russia will be arriving at OPEC soon. He is under U.S. sanction, and the Russians have every incentive to want to push prices higher. They also have every incentive to try to scuttle the European Union's plans to impose sanctions and a price cap on Russian oil come December 5.
And that's why this potential meeting is so much more important, that there's so much more riding on it. This is not just about prices. This is not just about the market. This is about global stability from a defensive perspective, from a security perspective. Do they not understand that, or do they not care?
I mean, Becky, this is far more than about oil. Now, Russia is at the head of the OPEC plus table. There are no indications that Russia will be vacating that seat. But to have the Russian deputy prime minister in Vienna at this moment, obviously, this is not just an oil story. This is a geopolitical story. This is a security story. And we're going to be watching very closely to what he says in this press conference today.
We've heard the White House may have been making calls, trying to get around. Is there any influence from them or no?
I mean, obviously, this is not something that the White House wants. They do not want an OPEC plus production cut. Remember, President Biden visited Saudi Arabia in July. And so I think they were trying to potentially scale back the size of this cut. But again, all indications are that we are hearing right now, this is going to be a multi-million barrel a day cut. Potentially 2 million barrels a day is going to be announced this afternoon.
What will that mean for oil prices, for the oil markets?
I mean, Becky, this is really an interesting question because you have a number of OPEC countries that have been underperforming. So the question is this effectively going to be a sort of paper cut, or is this going to be a significant pullback in actual production? So who does the production cuts will matter in terms of what the market impact will be. And even if we have a sort of muted response today because there's already this expectation of production cut, fast forward to December. That's when that European embargo on Russian oil takes effect. The price cap policy is supposed to launch. And so I think what we're setting up for is a potential significant bounce come December. So even if we don't see it today, keep your eyes on year end.